And I really believe in this business. This to me feels like Bitcoin in 2012, Amazon in 15, Tesla in 16, Virgin last year. This is an enormous bet for me, and I think that Opendoor is going to build a huge, huge business.
What's up guys, I'm back like I never left. In this video, we are going to be talking about a SPAC company that is finalizing their merger, and I covered this company a few months ago when Ark Invest started to get involved in this specific company. So in this video, we're going to go over exactly when is going to be the ticker symbol change and the IPO date for this specific company, and what is the potential for growth if there's a huge, massive growth potential for this company. Now, this company is definitely disruptive when it comes to real estate. So we're going to go over exactly the initial investors. They talk about exactly why they chose to take this company Opendoor public to SPAC deal. They compare the massive growth potential of this specific company, like the growth that we've seen for Tesla, for Amazon, and etc. So they're saying that this company really does have a huge potential. So we're going to go over exactly why they think that way in this specific video. I'm going to go over also what is the ideal price point to get involved in this specific company. So I'm also doing a quick stock market recap. So make sure you stay tuned to the end of the video. Now let's get right into the video. Now I would really appreciate if you can hit the like button. If you have any questions or any comments, make sure you drop it in the comment section below. So the company that we're going to be talking about is going to be Opendoor. So they had the meeting today, so they voted that they're going to be proceeding moving forward with the business combination with Opendoor. So the specific date that this company is going to be going public and their ticker is going to be changing is going to be in December 21st. You're going to be seeing the ticker symbol change from IPO to OPEN. So currently the ticker is IPOB. So they had this meeting today in December 17, and they're going to be closing the business combination in December 18, 2020, which is going to be tomorrow, Friday. So that is fantastic. We talked about this company when initially that it came out, and the Ark Invest already get involved in it. And when you look at exactly how many shares Ark Invest holds this specific company, so they hold it in 2 of their ETFs, and this is exactly the amount of shares that they're holding right now. So we're going to go over and watch a detailed video about the initial investors, what they think about the potential of this company, why they took this company public, and why they see a huge growth potential as compared to like Amazon, Tesla. So we're going to go in detail and watch that specific video, and after that I'm going to come back and talk about the stock market and what is the ideal price point to get involved in this company in the current moment. So let's check out that video.
IPOB is merging with Opendoor, and Opendoor will be going public. This is the largest online consumer real estate business in the United States. It's doing something really incredible, and what I wanted to do was take an opportunity to give the viewers a sort of behind the scenes look at how we decided to do this investment. It's more than $1 billion. It includes ourselves as well as a bunch of very well-known other co-investors. And so I think it's important first, I wanted to just take a step back for you and talk about what this whole craze around SPACs, but specifically what my goals were with IPO 2.0. The reality is that a lot of investors are really shut out from the growth that exists in Silicon Valley and tech businesses. But what I'm trying to do is really democratize that access, find these iconic businesses, help them get public, enable them to grow for long periods of time, and really help build a legacy business, because if we as investors can be a part of that, then we can basically share in those gains as well. So the setup is that. And so what we did was we started to look across a whole bunch of industries, and one industry that jumped off the page was consumer real estate. And the reality is that in the last 20 years, but even specifically in the last 6 months, everything that could be bought and sold online has moved online except that. And real estate is interesting because this is a category that touches every single American. This is the pillar of the American dream. 68% of Americans own a home. 32% probably want to at some point. 5 million homes are sold every year. This is the largest undisrupted market in the US. It's $1.6 trillion. But despite that, it's completely fragmented. It's low convenience. It's low trust. It's low NPS. And a third of the people in the marketplace actually only do it part-time. And so this is where we found Opendoor. And what they have done is something really incredible. And we think that they are building what we love to call a virtuous cycle. So how does this work? You as a consumer can now go to opendoor.com, and within 24 hours, they will give you an all-cash offer for your home. And if you choose to sell within 3 days, you can sell your home. It's a really incredible experience, and so you can start to understand how they can build a really powerful competitive moat. Because the more offers that they're able to make, the more homes that they will buy and sell, which means the more markets they'll dominate, which means the more value-added services that they can automate online, for example, mortgages, title, escrow, all these things where you used to have hundreds of pages of documents they can streamline through a mobile app. It also allows them to work with banking partners to secure large pools of capital at cheaper and cheaper rates. They can pass all these savings on to you, and all of that drives more demand to the business. Now, that's what got us really excited about the company, but then we took a step back and sort of Buffett and Munger language asked, what's our margin of safety? What can we rely on that allow online buying of homes to grow relatively unimpeded for a long time? And there are 5 really important trends that I think people need to understand. The first is that coming out of the global financial crisis, we've seen a massive underbuilding of housing supply. This is creating large housing affordability issues in major cities, and people are moving. The second is that because of the tax situation in America, the federal government eliminating the state and local tax deduction, state budgets in peril, taxes are going up, people are moving. The third, because of coronavirus, you can now work from home. Many people can work from anywhere, so they are optimizing for quality of life and they're moving. The fourth, you have 75 million Americans, digitally native millennials, who want to do everything online. They're starting to have families, they're looking for homes, and now they're stepping into the housing market. And then fifth, and probably the biggest accelerant on all of this, is as of a few weeks ago, the Federal Reserve basically told us that they're going to keep interest rates effectively at zero for a very long time. And we think that's going to drive an enormous amount of home ownership and the velocity. So when you put these things together, there's a really important trend that's happening in America, which is that the huge populous states like New Jersey, New York, and California are stagnating and starting to lose people. And these younger, cheaper, more dynamic cities are gaining enormous share. And these are the markets where Opendoor has already launched and is achieving scale. And so this is a business that we think is now very much proven and ready for prime time. They have 70% of the market, so these guys are the dominant leader, almost 4.5 times bigger than their next competitor. Last year alone, they did $4.7 billion of revenue. And 2023, these guys will do almost $10 billion of revenue. If you take the playbook that they have and you just apply it to the markets in which they can expand in the US, at 4% share, this is a business that will do $50 billion of revenue. And it's a merger that really creates an opportunity for investors. We priced this deal at 1 times 2019 revenue, but it's also an opportunity for Opendoor to raise the money they need, fortify their balance sheet, and really create more value and scale. So the last thing I'll say is I want to take a step back and just remind folks of, the times that I've come on, I've really tried to find asymmetric upside opportunities and present them to you, Andrew and Joe, and the rest of the viewers. And I really believe in this business. This, to me, feels like Bitcoin in 2012, Amazon in 15, Tesla in 16, Virgin last year. This is an enormous bet for me, and I think that Opendoor is going to build a huge, huge business.
Yeah, so currently ipob, which is the ticker, is going to be changing on December 21st. So it's close to the 52-week high right now, around $29.48. And of course, if you want to get involved in it right now, you see huge growth potential. It is actually having a breakout to the upside. So usually these merger SPAC companies, they tend to sell off a little bit after they have finalized their merger. So if you want to wait too, that's okay too, because you're buying it right now at a high price right now, a 52-week high. But if you see there's going to be great potential of growth in the future that is going to be exponential, then definitely get involved in it. Of course, you can definitely risk off of the support area we have over here at around like $26, $25. And if it dips, to $26 to $25, that is the ideal price point and get involved in it. And if you definitely can buy, you can scale into your position and just buy in, 5 or 10 shares if you want to, if you don't want to wait, for the stock price to dip to the downside. So Ideally, definitely keep it in your watch list, of course, if you're just somebody that's waiting on the sideline to get involved in this company. But definitely be patient with it. This company definitely has a lot of potential for the future, just like what we saw on the video. So now let's talk about exactly, what happened to the stock market today. As you can see over here, the stock market had a phenomenal day today, even though the job number reports were relatively, ticked up to the upside. The stock market really didn't care. The stocks just went up to the upside. And, some of the stocks that are in the healthcare sector that are beaten down a little bit, they recovered. Pfizer has been selling out to the downside a lot. We got J&J, and we also have some industrials. Some of the big tech companies like Apple, Microsoft didn't do that much, but Tesla stock actually went up significantly the upside. We talked about this company a few days ago. They're going to be included in the S&P 500, starting, of course, it's going to be Monday. It's going to be public, but, tomorrow is going to be a huge day for Tesla stock. So we'll see what could potentially happen. We saw the volume increase today a little bit to the upside, and that's why you saw a significant move to the upside, and it made a new 52-week high. So even though after hours is selling off to the downside a little bit, it made a new 52-week high. So we'll see if that momentum continues moving forward for tomorrow. So definitely keep it on your watch list tomorrow to see what happens to Tesla stock. So the majority of the strength today came from some of the healthcare stocks and some of the financial stocks, and of course we have other sectors also too that participated today to the upside. So it was a relatively solid day. We have stimulus talks moving forward. That's fantastic. It's going to be finalized. You'll see some new airline companies that are going to be getting a lot of stimulus they're going to be getting a lot of stimulus money. So that is fantastic for them. But moving forward for tomorrow, we have some important economic reports that we need to be watching out for. So for Friday, December 18, we have 8:30 a.m. We have the current account deficit. It's going to be for Q3. The previous was negative 171 billion. Also at 10 a.m. we got the leading economic indicators for the period of November. The previous was 0.7%. So definitely keep an eye on this economic report. And if you have any questions, any comments, you should drop in the comment section below. Make sure you manage your risk if you want to get involved, especially in these SPACs, and Tesla and some of the major stocks that we talked about. It can get really rough. It can go up and down a lot significantly. So make sure you manage your risk. And if you want to join, get free stocks, check out all the links below in the description box below. But I catch you guys on tomorrow's video. Let's get it. Have a wonderful day.